This is a video report analysis of Willbros Group as part of Burkenroad Reports, a program of Tulane University A.B. Freeman School of Business. Analysts are Leslie Arriaga, Aaron Birch, Daniel Hughes, and Joe Short. Willbros Group, Inc., ticker symbol WG on the New York Stock Exchange, is headquartered in Houston, Texas, and is a full-service engineering and construction company with services including engineering, procurement and construction, project management, maintenance, and other services to private and government entities. As of the release of this report, Willbros Group is trading at $4.99. Willbros' market cap is approximately $245 million, with 49 million shares outstanding. Here is a snapshot of the past 60 months' stock performance. Willbros stock has struggled to recover from the financial crisis in 2008, when stock plunged from a peak of $45.33 in June of 2008 to $6.36 in November of the same year. Since then, Willbros' stock rose to $18 per share in January 2010, and since has gradually fallen to the $4 to $5 range. Willbros' objectives for 2012 are to reduce debt, improve underperforming units in their utility T&D and their downstream oil and gas segments, improve full-line growth in their Canadian oil sands operations, and improve profitability in their oil and gas upstream segment. In 2012, Willbros strengthened its business segments by generating a growing, diversified stream of revenue through its utility transmission and distribution service, pipeline construction, and upstream and downstream engineering services. However, the company's inconsistent performance in operating income should remain a concern to investors. In 2012, Willbros experienced delays in 2 projects and losses from reduced productivity and higher than expected costs in Canada. However, Willbros management has increased its bid activity in the Canadian oil sands, continued to realize growth in pipeline construction, and remains optimistic towards its utility T&D performance. Willbros suggested the company plans to divest underperforming business units as it focuses on goals to improve performance efficiency and pay down debt. A large portion of Willbros' debt stems from its $300 million acquisition of Infrastructs in 2010. Willbros has set a 2012 debt repayment target range between $50 million and $100 million while it continues to sell non-strategic assets. The acquisition of Infrastructs diversified Willbros' holdings and moved the company into a solid and relatively stable industry. However, a decline in future investment projections in the T&D industry could challenge Willbros' attempts to pay off its debt burden and move into positive operating income. The company is banking on revenue generated from its utility T&D segment to sustain future growth and generate cash flows to pay off the debt assumed to fund the Infrastructs purchase. Willbros appears to have an impressive backlog through 2013. However, we are concerned the company will see growing revenues in the T&D segment beyond that period. Investments by utility companies in transmission and distribution are forecast to peak in 2013 and then decline. Willbros' entry into the Canadian oil sands provides additional revenue-driven opportunities, with forecasts showing production in Canada to continually increase over the next 2 decades. However, unforeseen project delays and costs have impeded Willbros' growth in the Canadian and oil and gas segments. In 2011, the Canada segment contributed $150 million to revenues, and as of September 30, 2012, it had a revenue year-to-date total of $129 million. Legal uncertainties were resolved in early 2012, and settlements provided a clear financial outlook for Willbros' litigation costs. A settlement with West African Gas Pipeline Company Limited, or WAPCO, was agreed to in March of 2012. Terms include payments to WAPCO over a period of 6 years totaling $55.5 million, with $41.5 million deferred to future years. Criminal and regulatory charges from the United States Department of Justice regarding violations of the Foreign Corrupt Practices Act were moved to dismiss. All penalty payments and DOJ requirements have been fulfilled by Willbros, and significant efforts were made to implement internal controls for prevention and detection of future violations of anti-corruption laws. We've given Willbros a 12-month target price of $6 based on the discounted cash flow and price-to-book value models. We've forecasted next year's book value per share of Willbros stock by dividing next year's forecasted stockholders' equity by next year's forecasted weighted shares outstanding. We then multiplied the result by the average price-to-book value of 6 comparable peer companies in the oil and gas services and energy infrastructure industries. For discounted cash flow, we calculated Willbros' free cash flows from our forecasted operating cash flows, net CapEx, and interest expense. The free cash flow totals were then discounted at a rate of 14.57%. This rate includes a weighted average cost of capital of 11.57% and an assumed liquidity risk premium of 3%. We also assumed a reasonable terminal growth rate of 3%. We subtracted debt from the total present value plus the current cash balance to arrive at a value of equity for Willbros and our target price. The Burkenroad reports are produced solely as part of an educational program of Tulane University A.B. Freeman School of Business. The reports are not investment advice. Investors should not regard the presentation as a recommendation to sell or buy any securities mentioned. Investors should consult an investment professional and/or conduct your own primary analysis before making any investment decision.